is greed and what is fear. Okay. So what are the fear factors? When we are in fear, what we end up doing in markets, basically there are about 5 points I can discuss. He's afraid to admit he has made a mistake and cut his losses. So many times what will happen, we lose money because we have a fear of losing money. So even though sometimes we take a wrong decision by entering into a wrong company or a wrong stock, we hesitate to book the loss and then we'll end up booking major losses. And that is because of the fear of losing money. That is the first factor of fear, we can say. And then investor is winning in a winning trade and book profits too early. So many times what will happen, you enter in a good trade, good stock, and that will rally. But you end up booking profits so early where you miss entire move, you miss entire 80% move, you end up booking only 10 to 20% profit because of the fear factor. So because yesterday or day before yesterday, you might have lost in one trade, or you might have seen market is very volatile. Then fear takes place, and then you end up actually missing a lot of profit because of your decision making. This is another factor of a fear. And then investors are frightened to buy in the middle of the bear market because price is falling. So today we are going to discuss about it. So markets, whenever they are falling, they are fearful to buy because they feel that they want to catch the bottom of the market. But let me tell you, in my 25 years experience, nobody can catch the bottom. Nobody can predict when market is going to reverse. And the best important quote in the markets is you have to follow the market. You cannot dictate the markets. So you have to follow. That means if market give you completely a reversal signal, then it's a reversal. But you cannot think that, yeah, you can catch the market at the bottom, and so you have to enter when you have a conclusion to enter. So market may fall further, but you need to be patient. If you are right, you can actually wait for the opportunity and for the market to reverse, but you cannot catch the bottom. And fourth one is investors. Investor is frightening to hold his portfolio in a falling market and sells near the bottom and maximizing the losses. I think everybody please be on the mute. Yeah. Okay. So generally what happens now almost I can say mutual fund portfolios are 20-25% down. People who invested around 2 years back might be like not witnessing that, but people who invested very recently from last 6 months, they might have witnessing some 10 to 20% fall in their portfolio. Yeah, it happens in the market, and how it has happened, and how it happens, and how it actually like give an opportunity to us. That's what we are going to discuss. And generally when we are in fear, we try to hesitate to like hold the position even though you are confident about that particular fundamentals of the stock, and you end up losing money. This is what happens with the fear. And then investor panics and sells when market drops without trying to ascertain the long-term situation. That means we generally don't think long-term. And I will tell some of the conversation I will keep on having with my clients. Generally, what happens? When I book the profit, they say, hey, market may further rally, na sir. Why do you want to book short-term profit? Generally, there are three conditions of the market. One is the bullish scenario where markets will have a long run, and then there is a continuous bullish trend. And another one is the consolidation where market moving both sides. And another one is the bearish trend where market for some time keep on coming down. So these are the three trends that are there in the market. What decision that we need to make is basically basing on this particular scenario and the trend of the market presently. So another thing is, whenever markets are going up, people are very greedy. They want to make more money. And so many people said that, sir, market is rallying. You did not enter in any position. Why? Maybe we have our own reasons because we study the market and then we try to take the call. And another one is that when market is falling, people are panic and they keep on calling, sir, market, where it will go. And we may lose heavily. What is going to happen? So this is all comes because you are not able to ascertain the direction of the market and not able to understand what's happening in the market, and you are not stable with your decision. So even though you bought a good stock, You are fearful, and then you try to do some figure it down something. So this is all fear factors which actually minimize our profits in our portfolios. Okay, this is about fear. And let us talk about the greed. So let us get into the real subject after this thing. And generally in greed, what happens? The investor loses his sense of balance during the bull market and believes that every stock will give double or within next 2-3 weeks. So many people, when bullish rally was happened, so many people started asking me, sir, I got a news that this stock will be doubled within another maybe 10 days or 15 days. And I got a news I have seen in the TV channel. And so many calls came to me that stating that, sir, this particular stock is going to rally, and I got a news, somebody told me. So these are all will happen because of the greed. That means you want to make money overnight, and that too very, very fast. Is it going to happen in markets? Certainly no. So this is what you need to understand. When you are in greed, you just don't bother about your risk. You just wanted to play, and that because you have seen the market rallying, certainly you think that, yes, you can do that. Then he knows that the portfolio is overvalued, yet he continues to hold, relies solely on market momentum. So obviously, like when market rallied, so many people don't think to book the profits because they want more profits, and they don't look into the valuation of that particular stock, whether it is rightly valued or overvalued, and they don't have sense to try to understand what is the fundamental behind this rally. Is it news based, or is it real move, and people are behind the move or not? This is all that they don't think, and they just wanted to hold the stock. Excited by the prospect of rapid gains, he impulsively spent all money in the excess trading. That means yesterday I made good money, and last 5 days, 6 days, and 1 week market is bullish, and whatever position I took, I got money. So generally we lose the sense of risk, and then again we try to gamble more and more and try to do more number of trades which are not required in a normal condition. So this is what happens when greed enters you into your mind, and there is no quality check in the place. When your mind is gripped by the greed, you don't think about the quality. You just see the momentum. The stock is rallied. Some penny stock rallied from here to here. So let me get into that. So only thing is you don't do proper homework, and just you are driven by the greed. So these are the both aspects. Either fear or greed is going to drive the investors, most of the investors, and it's not wrong. I'm not telling it's wrong, but you need to understand the condition of the market. And whenever you understood that, yeah, something is wrong, or something is need to be take action, you should take action. That means you should be balanced. Either you should not be very greedy, either you should not be very fearful. So you need to maintain that balance if you want to be successful in the markets for longer term. So let us get into what is happening now in the market. Okay. And we are going to talk about action plan after we see certain things in the market. So let us first of all understand high returns but high risk, greed, waiting to sell at the highest price of the rising market, waiting to buy at the lowest price of falling market. Okay, fear is selling frenzy when market starts to fall, bring stock prices lower than their intrinsic value. In fact, it's the time to buy. Whenever there is a time to buy, when you are in fear, you will miss the opportunity. And whenever there is a rise, you actually don't enter into that stock, even though you have got all the confirmations. Buy when market is falling. That is what generally like people don't do. And how to mitigate the risk is diversify and long-term investment. Okay, so this is all a general thing what we are talking about. It's about trading psychology. And according to me, around 70 to 80% people consistently, if they want to make money, they have to have the right trading psychology and decision making. Otherwise, even though they have knowledge, even though they do a lot of hard work, they end up losing money. So working on your emotional balance and trading psychology is most important aspect if you want to be successful in the stock markets. Okay, so next, let us come to the reality check. So an overview and market declines and increases in India. So basically, like what happened historically, let us see what are all things that happened. And this is what has happened in 2008. Okay, this is what has happened in 2008. There is an economic crisis worldwide where markets are meltdown, and no surprise, Indian market also fallen. Almost this entire move is a fall. And what is the trigger? Collapse of Lehman Brothers and the subprime mortgage crisis in US. I think so many people who are in the market from long time, they understand this fall where all world markets have fallen, and Indian market is no exception. Indian market is also fallen a lot. Then next thing is, what is the impact of India is FIS pulled out the funds, liquidity dried up, and sectors like real estate, banking, IT faced major corrections, especially in 2008 and 9. Outcome, Sensex fell by nearly 60% from its January 2008 peak. That means Sensex has fallen how much percentage? It's almost 60% fall happened in 2008 crisis. So I think everybody knows this, people who are there in the long term. But anyway, even though you are not there in the market, yeah, this is what has happened if you check historically. So then rise from 2010 to 2017. Afterwards, this is the fall. Okay, this is the fall, what has happened. But afterwards, what happened? From almost this level to nearly 12,000 levels, 12,000 change levels, Nifty rallied, and it is a continuous rally. And why it has happened from 2010 to 2000? Number one is economic reforms happened in India. India opened up to the world, and they created a lot of like openness has come into Indian economy, where they started FDIs. They allowed foreign direct investments in India in so many sectors. And in fact, Manmohan Singh was there previously who started all this revolution. And then there was a stable government by Modi in 2014. And FIS flows are very good in this particular period of 2010 to 2017. Almost FIS net inflow. FIS is nothing but foreign institutional investors. Approximately 12 billion US dollars have been pumped into Indian markets. And that is the main reason for the rally of the business when it comes to 2010 to 19 rally. Okay, afterwards, what happened? And you all know, I think so many people witnessed this fall recently because it's a COVID fall. And what is the trigger? Trigger is global lockdown, and then economic slowdown due to pandemic. Then impact on India is panic selling and FIS outflows, and a sharp fall in economic activity, because 3 months everything is shut in the world. Automatically GDPs have gone into the minus, and then in fact because of that there is a panic selling which has happened, and market has fallen from 12,500 levels to almost 50%, almost 7,500 levels. Nifty has fallen. You know this. Outcome, Sensex fell by 38%. What happened? Sensex fell by 38% in March 2020 before recovering due to the fiscal and monetary stimulus. So after that, what happened? So after that, rise from the COVID fall. So that is nothing but from 2020-21 to almost like it has happened up to 2020 to 23. So we can say that. And what has happened? Why it has been rallied from that much low to creating a new high and then creating the peaks? Monetary stimulus, stable government, structural reforms in the economy, and FIS inflows again. Approximately 20 billion US dollars have been pumped into Indian markets by FIS and FD and FPAs. That means foreign portfolio investors as well as foreign like institutional investors. This is what has happened in the period of this. Then next, what happened? Then again there is a fall. When it is this fall, almost in 2022, 21, 22. So there is a fall. Anyway, I will show entire thing in one chart after this particular presentation, so that after this analysis, we can see that entire chart in one time, where you will understand what's happening to Indian markets from long time, say at least from 2008. So this is a Russian fall, but here is the change what happened in Indian economy. In this particular Russian fall, and this is where it has started. So, and then it is slowly consolidated, but it is not a major fall which has happened. And it is not even gone down below 16,000 levels. From 12,000 levels, it has gone to almost 22,000 levels. From there, it has come almost to 16,000 levels, 16,500 some level, where it has bounced back again immediately. And exactly at this time, if you see the US markets, what happened in US markets is it has almost fallen to the COVID levels. So our COVID level highs are around 12,500 for Nifty, but our market never came down to that level. It has actually came up to 16,500 that level and then bounced back immediately. And what is the thing? Trigger is war, impact on India, raising oil prices. Oil has shooted up almost nearly $120 at that time. Supply chain disruptions and market uncertainty. These are all the cause for this particular correction, and outcome is increased volatility and market corrections. That is what has happened in 2021, like 2022, when Russian war was there. And then this is the one more fall that we can see in the Indian market. And next thing is what happened. What happened is this, and it is the present scenario. From there, market reversed and actually had a great outperformance of all over world markets, and Indian market actually outperformed all the markets in the world. And that is the period that where people have got lot of money, and it has rallied up to almost 26,000 levels. Nifty, DIS buying, that is the main thing what we can see. And retail participation, that is improved a lot. And structural reforms and economy resilience by domestic economy. That means India is mainly focusing on depending upon our own economy rather than FIS, rather than US, rather than other world countries. So that is the main change. That is what has happened. That is the main change. That is what has happened. Just a minute. I think there is something wrong. Just a minute. Yeah. Okay. So this is done, I believe. So this is what we are talking about. And what is the change? What is the change happened here is from 21 onwards, FIIs are selling continuously. Last time when you see the raise in from 2009 to 2019, so there was a reason for the market, Indian markets to rally. That is FIIs inflows into the Indian market. And again from 2020 to 2022 also, that is a, but here now from 2023-24 rally. So if you see, FIIs are from 2021 are selling continuously. 2021, there is a US 5 billion US dollars is being sold. And 2022, it is a net thing, net selling what is happened. So they might be buying something, they might be selling, but ultimately what is the end result, what I'm talking about. So in 2021, that is 5 billion US dollars, and 2022 14, and 2023 10. And in 2024, it's net positive again. And actually, it's not negative, it is the positive. So that is what has happened, and why this move is happened, even though FIIs are selling. So far, till 2021, the scenario was whenever FIIs, whenever FPIs bought Indian market and they are net buyers, then only Indian market rallied. Okay. But what happened from 2021 is, even though the FIIs, FPIs are the net heavy sellers in the Indian market, our domestic market has started absorbing all the selling, and then still we raise it to the new highs, and then actually we have gone to the highest level. And now today we are seeing this correction, and we are exactly here now. So this is what is the scenario, and what you observed so far after explaining all these things from 2008. Okay, what is that you can actually observe? Anyone?
Yeah, this is the good opportunity to buy the market.
Yeah. Basically, 2008, there was a 1 year
Akshita,
fall. Okay. Afterwards, there is a 9 year, almost 10 years rally. Okay. And then in Russian war, market consolidated. After that, again, there is a 2 years rally. And before that also, when it has fallen, I think there was about a period of even COVID. It's a very short term, very short term, short term like downtrend. But it's a big pullback, and then there is a big rally. That means hardly 1 year downtrend, and followed by almost 5 to 6 years, like 3 to 4 years bull trend. So what is that you have to make out like in this market condition? I'm talking about 2020. If we see the chart, so let me get into the chart now. I think I will summarize this so that it will be easy for you. Okay. Yeah. So this is the chart of Nifty from even 1996. What is the direction of the market? Direction of the market is like this or like this. So it is always bullish. Even COVID is also in a correction, and that's a sharp correction because of the global shutdown. But if you see, this is the correction we talked about, and this is the correction we talked about, and this is the correction we talked about, and this is the correction we talked about. But whenever there is a correction, there was a big opportunity to buy the markets, and then it has rallied. Now, actually, again, it is correcting. And what are the factors that you have to, like, we have to look into, and when to buy is the main thing. Not that getting fearful about the market and fearful about the newses and fearful about the Indian economy. And we will discuss about that in next slides. So far, whatever I explained, any doubts? Anyone contradict with me? Yeah. Yeah, that's what we can understand. Yes, ma'am. So, any doubts so far? Why I have shown this, the each and every phase of Indian market is, every time there is a fall, it's a great opportunity to buy Indian market, because Indian market is in a bullish trend, and there are about economic cycles, 4 economic cycles. Then we have to talk about. One is the growth cycle, and another one is recession, and another one is recovery, and another one is like again growth. So obviously there is another thing called slump. I don't think we can go into that at any point of time. Maybe countries like Pakistan and Sri Lanka, they might have gone there, but we were never there. So that is what we need to understand. When any nation in a growth cycle, it is going to continue for the decades, not 1 or 2 years. It is going to be in the decades. That means maybe another 2-3 decades we can expect a rally, and we can see this in US markets from last 70 years, in fact. So that is what is going to happen to any economy when it is in a bullish trend. Okay, let us get into the presentation. More interesting aspects are there in that. So yeah. So let us understand another important things in the markets. First of all, let us discuss about global scenario. Okay, I want to give complete knowledge about the economy of the world as well as India today, so that you will have clarity about where you are and what we are doing. That is the idea of this particular webinar, and I want everyone to participate because of that. So global GDP actually felt that economists felt that it is going to be a major drop. Global GDP is going to drop in a great way. That's what was the projection by the economists. But fortunately, global GDP growth rate has not gone down that much. It's only slowed down, but no crash at all. So that's a good sign, number one. And next thing is, just a minute. Yeah. Next one is like, what is happening? Foreign direct investment dropped in China and increased in in other emerging markets. This is what has happened in actually like in this particular decade, I can say last decade, where China has lost its flavor. And then foreign direct investment, FDI, whatever it has happened, it's actually moved from China. And the biggest advantage is being taken by India, where almost 18 billion dollars have pumped into India because of this reason. And Mexico was the highest. Indonesia and Vietnam are also the these are all emerging markets where China used to dominate the emerging market, this thing, but now actually China has faded out, and actually it has, that entire money has come to other emerging markets. That is the major thing what has happened in the world. Okay, so next thing is, so actually dollar is the culprit. Today you are seeing this FIIs outflows, FPI outflows. It's mainly because of the dollar strength. Why it is the why it has to go to why it is because of the dollar strength is basically people think that US economy can give them the more return, where dollar is going to have more strength, and then they may get more opportunities in US itself. So that is the reason, one of the main reasons for flowing money out of emerging markets to US, and that is what is happened. But still, gold is an outperformer than the dollar. And another asset class, Bitcoin. I don't want to talk about it because I never done that, because there is no logic and base behind it. So we don't get into that. But still, it's 120% is the growth. So dollar strong against other currencies, all other currencies in the world. That's why you are seeing a rupee at the lowest level also, because of the dollar strength, not because of the Indian economy. Okay, and it is happened to all other currencies in the world. So that is what is happened. And then if you see, this is the one which is worrying a lot of people in the world. And I think this figure has been there. It is 8%, more than 8%. The fiscal deficit, the highest fiscal deficit is in USA, that is nearly 8%. Europe, it is at 4%. And India, it is around nearly 6%. And emerging markets on an average, if you take, it's 4.5%. So how actually USA can manage this fiscal deficit is the biggest question of the world today, where this particular, even though there is a fiscal deficit, still that financial, like monetary stimulants and other things, are like they printed money and distributed everywhere. US is the major economy which has done that, and because of that there is a deficit, heavy deficit in the government, and we never know how they can manage that. That's the biggest question mark in the world today, how US can manage its biggest fiscal deficit. Okay, that is one point. And if you see, then if you see the statistics, generally in US, if they want to generate, that means if they want to generate 1.8, like they have to, if they want to earn $1, that means they have to earn, that means increase of $1, they have to spend almost $1.8. That means almost like, if they want to, that means there is a public debt which is used for the GDP growth, and almost to raise $1, they have to spend $1.8 debt. That means a heavy burden on the government. And yeah, certainly this Trump policies, how far they are going to have impact on this particular thing, and world is waiting for that, to look into that. And euro, it is almost 1.4. That means for $1 improvement of GDP, they have to spend $1.4. And in India, it is, yes, $0.8 they have to spend for 0.7. It is very reasonable. Okay, this is what is the scenario. And the share of key emerging markets growing faster than USA. This is the best. And that is what is happening in the world today. So if you see, like from 2000 to 2014 also, there is an increase. And again, 2015 to 2024. And it is been projected up to 2029 that emerging markets are going to have more like growth than the USA. which is actually a comparison of last 2 decades. Okay, so we are in the right place. And now China, why some of the FIS sold Indian market is also one of the reasons is China is cheaper now because of whatever happened, because of that the money flows outside, and because of the economic this thing, some of the companies are looking attractive in China, where if you see the price to earning ratio, so China is 10, and then yeah, other ex China, other emerging markets is 12. You can see here why Indian market is being sold is because of this reason, and we are at 22. That means we are costlier than any other emerging markets today, and that is the reason some of the FPAs, some of the FIAs, they don't want to take risk at the highest levels, and they wanted to enter into the market, but they think that Indian market is costly. That's the reason some of the money has gone out from last 3 years, and this is the main reason. And it's not that India is not growing, it's not that India is not having proper I can say economy. So it's not that. Basically it is the adjustment of them basing on their portfolios. They wanted to get into the cheaper markets than the costlier market. That is the reason FIAs and FEAs sold in the market. Okay, and this is, and in US is much even more costlier than us. So that is what is happened. And then if you see, this is something we had to be careful, where in India our large caps annual returns is 8.7% only, and mid caps is around 9.7%, and then small caps it is 13%, and it is exactly opposite in US. So large cap it is only 13.6%. That means in US the top tech companies, who are all there, top 5-6 companies, Google, Apple, Nvidia, and all other companies, they are actually rallying, and that is the reason large cap stocks are costly in US, and small cap and mid cap are very cheaper in US. But in India it is other the way, where large caps are very costly. And there is one more reason behind it. All the FIAs, most of the FPAs and FAs only holding large cap stocks in India. That means major share of the FIAs and FPAs is only in the large cap. So when they want to take out money from India because they think it's costly, from where they will take? They have to sell the large cap stocks, obviously. And that is the reason whenever FIA selling is happened, these large cap stocks actually underperformed small cap and mid cap. But there is a dangerous sign here, where mid caps and small caps are highly valued, and they may adjust their valuations. And we should be very careful when we enter into any company, especially small cap and mid cap company, and cross check 10 times whether the valuation is attractive or it's costly. So we need to be very careful on this. Okay, so next thing is, you can see this is what has happened in India. So large caps is price to earning PE ratio of large cap is 20, but PE ratio of small and mid cap is 27. In USA it is other way around, which even old slide also shown. So this is what is the opportunity in India is like, yeah, you can actually think about buying large caps which are having decent like annual returns and quarter-on-quarter returns in your portfolio. That's what is going to be the change of your approach by seeing these particular slides. Okay, and the US dollar strength against the ground reality. This is the major thing what is happening. And when this chart turns, when this chart turns, and then US dollar index starts falling, that is the time you can expect a big rally in Indian markets, where you can actually start buying our Indian markets. You can see a good reversal out of it, because obviously FIS or FPIs are waiting to come into India when it is reasonable to enter. So this is what it is. So obviously, whenever there is a correction, People are waiting to buy, including FIS and FIA in India. Only reason for this selling, whatever happened, is it is because of their own portfolio adjustments, not because they don't have a confidence on the Indian economy. And in fact, if you see, like any fund manager in the world, you take JP Morgan, you take any fund manager, they're all long-term bullish on India. Never said that India is not going to grow. The only thing is, it's a matter of time where, yeah, people are waiting for this particular correction. And then once correction is over, you can see, like every correction of small period of 1-2 years. So you have to be patient enough. You cannot say, because you have seen only bullish market, you have seen only prices going up. But when I have shown you the chart from last 2000 to till now, you might have understand that there is a correction for 1 year or 1.5 year or 2 years also. But after that, there is a period of 10 years, there is a market rally, which is 200% and 300%. So this is what you need to understand when you want to be an investor in these markets. It's like a test match. Okay. It's not like a 2020 game. And test match, what happens? Whenever there is a difficult bowler, you have to play defense. And whenever there is an easy bowler, you have to strike sixes. Obviously, if you don't get this kind of a mental attitude and then see the TV every day that and then think that, okay, markets will rally and always they will rally, there will not be any correction, then I think you need to learn a lot in these markets. So and it is all about like your expectations also. I want you to have a real expectations. What is that real expectation? Basically, like when anybody comes to me and then they want to start a portfolio or any kind of a trading account with us, initially when they are not in these markets, when they come, they say that 12%, 15% is a great return. If we get, that's, I'm very happy for that. Okay. But after tasting some kind of a result and looking at the markets and the rallies, sometimes their expectations will go too much and they will start expecting 40%, 50%, even 100%. So somebody said to me, one of my client who is a retail trader, he takes suggestions, but he will never listen to us. He will go by the TV and he will enter into everything. And he says that if we go, don't get 100%, what is the use in entering into any stock? That's what he says. So this is what is the problem. Try to understand that it is the best asset class in the world. You take real estate, the average CAGR is around 9%, not more than that. And if you take gold, it is also around 10 to 11%, not more than that. But stock markets is only the asset class which has given consistently more than 13-15% all over the world in any markets. So this is what you need to understand. And yes, there are opportunities, there will be rallies. You have to really wait for that and then grab those opportunities to make more money. This is what you need to understand. Okay. So next thing is, yeah. So let us discuss about the Indian scenario. What's happening to India? So we discussed about market falls and rises, and we discussed about global scenario. What do you understand about the global scenario? US is very costly. In fact, it is overdriven. In fact, now Trump come and he also drives it more, but will be a collapse. And when it is going to happen, we don't know. So I don't mind to say this because every market has to correct. Without correction, no markets will go up. And the point is that fiscal deficit cannot be at the highest level. And then that particular monetary condition of US is overdone. So obviously, yes, these few companies which are there after AA spending a lot of money, but at the same time, they should get returns out of it. If they don't see the returns as per their investments, then we can expect some big fall in the IT companies in US where that can actually run. But India is in a safe place. How India is in a safe place? Even the US economy is doing great. India is the first advantage because all our pharma companies and all our IT companies will have an advantage if US economy is strong and we are dependent on them. And even US is subdued. There is a scenario I have shown you. When Russian war is there, US market has fallen to the COVID levels. COVID peak levels. Previous as yeah, I will show you the Dow chart, Dow Jones chart, where it has come all the way to COVID levels and then started going up. But Indian market was never again came back to the COVID levels. It was sustaining above 16,500, 17,000, and then again it's rallied. That is the outperformance what you have seen. The same kind of outperformance you are going to see even US markets are in a correction. So, and main reason is DAS and then our domestic investors, that is all you. And if we lose the confidence about our own economy, who will actually like her? And even I really see silly sometimes, even at some fund managers, they come and say, they say something when it is bullish, and again they say, and they create some panicness by their statements of the public instead of giving confidence to them. So unfortunately, because yeah, they are also not above greed and fear. That is the problem, because they are also human beings, and human psychology is that. So obviously you should not go by the news, you should not go by any kind of this thing. You need to have your own study, which stock I need to buy, whether it is fundamentally all right or not, and technically it is showing good trend or not, and what are the things, and valuation wise, is it overvalued or it is undervalued, or yeah, as per the value. If you do this exercise, there is nothing that you require, and there is nothing that you have to depend on anyone. Yeah, you need to really understand what is the market condition today and how you have to act on that. And let me talk about DAs taking charge. This is what I say, fund flows in 2020-21. Actually, DAs are net sellers in the market. So then 21-22, DAS turned net buyers in the market, even though it is a small amount of 16,028 crores. But you see this figure, almost 1 crore 40 lakhs. I think 1,40,000, sorry, 1,40,000 crores is being sold by FIS in 2021. Okay. And 2022, still again, FIS are net sellers. And DAs are also net sellers in 2023 because of that period of Russian war and all. And 23-24, FIAs are the net buyers. Again, they came back very in a big volume in Indian market. That's why you have seen our market to rally 26,000 levels. And then DAs are the also net buyers. And now FIIs are still only 31,991 crores net buyers in Indian market today, but DAs already dominated FIIs, and some of the FIIs, FPIs are selling the market, but DAs are absorbing the market, and this figure can even beat this figure of 2023-24 in coming days as we progresses. So we are going to be rock solid with our own fund flows. That's what it is. And what is happening to GDP? Is India is reduced its growth? No, actually now it is been projected as 6.5 something, but still it is the fastest developing country in the world. And US is at 2.1%. And all other countries, you can see UK and China, nowhere. So this is what is going to happen. And once the growth is there, growth may come down little bit. But it's not that we are going to go down to 2% or 3% at any point of time. And because economy is in a shape of growth, and then it is going to go up, it's not going to come down. Maybe some small fluctuations here and there will be there. Maybe 6%, it may come down to 6%. Maybe from there, it may even bounce back. But still, the highest GDP growth in the world is of India, and ours is the fastest developing economy in India. And people are telling that we may go into third place, maybe within short span of another 3 to 5 years. So then what is happening to domestic investors? Why this revolution has happened in the stock markets? See, basically, I will tell you, unless until people invest into markets, economies will not grow. Who will fund the companies? And if the companies grows, employment grows, and economy grows, and companies grows, consumption will grow. Our India will grow. This is all interrelated. But if people don't invest, who will invest? And that particular thing has happened in US, and today you are seeing 100 years of legacy in US. And what about India now? We just started that. And you can see another maybe 20, 30 years of a long-term bullish trend in India. This is what it's my personal opinion, but yeah, it has happened in history with the countries which have got an economic revolution, where people have started participating in the capital markets, and that's what has happened, exactly happening in India. And our duty is to be confident about our own economy. Okay, so we are living in this country, and if our country goes to dogs, nothing is going to help us anyway. So the point is that yes, certainly we need to track all the fundamentals, what's happening, and you need to be careful while investing, but you should have long-term projection, long-term view, and then you should have confidence in our markets. Then next thing is domestic investors participation. Demat accounts have seen exceptional growth. In 2010, there is 20 million accounts. Now it is 36 million accounts in 2019, and 2024, now exactly around 150 million Demat accounts have opened. This is a big breakout in terms of participation of Indian residents in the market. Then domestic investor mutual fund investment, 10 million investors used to be there. Now it has become 45 million investors in mutual fund. And SIPs, even after this correction, recently from last 3-4 months, you are seeing a correction. But December figure is the highest ever SIP flows in a month. It's nearly 26,000 crores. Okay, in spite of the correction in the market. Okay, so many people started thinking that okay, mutual funds are not going to grow, or people are worried. No, people are confident, people are actually, and this is the time to invest more. Okay, and this is the time, a good opportunity, because this opportunity has come long time back. People might have missed it. Now there is an opportunity again. That's how you need to think. Okay, then dollar strength. So reasons for market correction. So let me tell you in brief, what are the reasons for this correction? Dollar strength, I already told you. Higher valuations of mid cap and small cap, that is already shown to you in the slide. Then cheaper China, obviously, that is also a very big economy. Obviously, FIAs, FPIs, who are all investing all over the world, they always look at the valuations. Obviously, they do that. Then no rate cut from RBI. So far, there is no rate cut from RBI, even though US markets have cut the rates twice, and I think 75 or 100 basis points they cut, but still RBI has not taken decision. They are very careful. Yeah, conservative, I can say. But now, yeah, if they start cutting the rates, that is going to even infuse the growth in a rapid way in India. And then Q2 results upside. So basically, last, if you see 5-6 quarters, quarter on quarter, more major companies have posted wonderful results, and Q2 was as miss expectation. It's not that they are very bad. No, so there are the misexpectation. The street expected something and they delivered something. But it is not like they are going down. No way. They are all good. But the point is the street is expecting more and people are expecting more. So that is what has happened in Q2. If you see even companies which have fallen, they did not post bad results. They posted good results only. But people are expecting more. And people, because they have already bought it with the expectation. And when there is a high expectation, obviously they will give more like premium to that. And obviously that has to be corrected some or the other time. And Trump fears, this is the major thing what looking at. And Monday is the crucial day for entire world. In fact, I don't know what that guy is going to do. So he may come out with anything. But if you see in a longer term, whatever may happen, India is going to be at advantage, even in the Trump administration also. Because if he takes measures to grow the US economy, certainly India is the first beneficiary. And anyway, Trump is not going to support China, and he has to support India in the other way. And our ties and relationships with America are very good. So in that way, it may be tariff, because he want to reduce his deficit. How he can reduce? So there is no other way, that he cannot improve the economy overnight. It is not possible, because it's already overburdened. Government is spending everything there. And it is from the debt. They are taking money, printing money, and then actually they are spending, giving it to the people. That's what is happening in US. So now, if they have to fill this deficit, there is only one way for them, by increasing the tariffs, and then they have to fulfill their uh, fiscal deficit, whatever they have. That is the idea of the Trump. But the problem is that, yeah, if he is very stringent, even US economy is going to be affected very badly, because yeah, it is a interdependent economies nowadays. And if you see, like, another statistics I will share with you, where the capital market size of US is 30%, but it actually commanding 70% premium of the world. It is going to adjust somewhere, no doubt about it. And it is going to transfer to the other markets which are performing. And India is at the, I think India is the front runner for that. Okay. So this is what is the, and events to watch: Trump decisions. Budget is coming up in the 1st of February, I believe. Q3 results are underway. So far, the results, whatever they have come, say IT companies like TCS and then HCL Tech, results are in line. But the problem is that, again, there is Trump fear, there is other fears. People still are not confidently buying those stocks. Yeah, they bought initially. Again, there is a correction, but they will stabilize somewhere, and they are very good bets. And even banks, Axis Bank is the big bank which has given so far, and it's in line. Small NPA has been increased. But if you see the public sector banks like Maharashtra, Bank of Maharashtra, and all, there are few stocks have come, Q3 results. So many have to come. So those are all good. Like, yeah, their picture is good, not so bad. So on Q3, if the improvement is there rather than Q2, when comparison, I think that is enough to rally our markets. And RBI decision, yeah, it's pending. A new governor has come, and he's going to have a decision in the, and people are expecting at least 50 basis points cut in coming, maybe not at one time, maybe 2-3 times. So minimum of 50 basis points rate cut is going to happen, which is going to infuse a lot of money into the market. And then obviously it has to grow. It has to take the growth path only. So this is all like you need to watch. So actions that are needed is think long term. This is the first suggestion that I wanted to give. Don't think short term. If you think short term, I don't think you can be in the stock markets. Maybe you will earn small money and go out. But if you are in longer term, people who made money, see, suppose somebody might have bought a Tata Motors at 65 rupees in 2020. Today, what they have made? It's a waiting of 4 years. Fine. There will be opportunities like that. You find out those opportunities. It's, and correction only the way that you can enter into good stocks at a reasonable prices. Okay. And increase your SIP amount. This is the time to increase your SIP amount, not to withdraw the mutual fund. Yes. Maybe it may take another 6 months to recover. Not a problem. If you are a long-term investor and you want to create long-term wealth, this is the time for you to think about increasing your investment. Assess the quality of stocks and restructure. Maybe you might have been holding some stocks which are not good in the quality. Quality means, like, yeah, fundamentally, maybe like their performance is not good. So get out of them, and then try the companies which are having good quality stocks and build the portfolio. Follow the swing trade system when market is uncertain. Suppose if you are well versed with the technical analysis, follow the swing trade system where you make short-term money and exit whenever it is needed. But it is purely for traders, not the investors. Keep 50% on quality stocks for longer term, even though you are a trader. Have patience, believe in Indian growth story. And to make you understand, being practical. So here there are some figures of Nifty returns. What is Nifty? It is the top 50 of India. Obviously, if it has to, for India has to perform, these have to perform. So if you see the annual growth in 2017, there was a big growth of 28.65%, where market rallied. In 2020, it is 14.9. and 2021 is recently highest 24.12, and 2023 it is 20. Now 2024 it is only 8. So you can see very clearly there is a fall, there is a rise, there is a fall, there is a rise, there is a fall, there is a rise. So you need to understand this. So obviously, if fall means that there is a rise again, and then that rise, when you are going to grab that rise and how you have to take the decision. I'm not telling markets are going to reverse right now from here. Maybe, I don't know. If Trump comes out with something, may correct, some more correction may have, but it is clearly visible that whenever correction is there, previously it used to fall like a sharp knife, like it used to fall like straight line. But now markets are not falling like that. People are buying, our domestic investors or mutual funds, and people are buying. And market, even though it is correcting, morely it is time correction, not a price correction. So if you see, hardly it has gone up to 26,000 and came to 23,000. That's all. It's a 3,000 point correction. And 1 or 2 days it has corrected, bigger correction. All other days it is in the range bound thing. So this is what you need to understand, and then you have to. And right now, my suggestion to everyone who is participating in this webinar is look into your portfolios first of all, and then remove the stocks which are not in the having good quality, and then don't try to finger your mutual funds portfolio. Don't try to do so too many changes. Just keep on investing with the same portfolios what you have, because some people what they do is they calculate the percentage. So this fund has given 50 like 20%, this has given, and so many people think that the small cap is giving highest return, so let me invest entire money into small cap. Don't look into that. Have a balance in your portfolio. So take the quality funds. Also check the fund performance, not only basing on the past, but also quality composition of the stocks in that particular funds, and then try to address the your portfolio restructuring. We can help you in restructuring your portfolios either in mutual funds or in the stock markets. So you can approach us for any kind of guidance that what you require. But the entire objective of this webinar is don't take decisions with the greed and with the fear. Be balanced, and then see what that it is there on the ground, and realize that, and take a call and think long term, and then yes, create the wealth. That is only the way that you can actually do in the stock markets. Okay, so now I will open this session for any kind of questions. Anyone, anything can be asked. I hope that I have given a clarity about global markets as well as Indian market, and what are the things happening and how you have to approach towards these markets, and then how to do it. Isn't it? So if you are all like if you have any other questions, you can ask me now. Yeah. Okay. No questions. If you don't have questions, there are only two things can happen. Either you don't understand anything, or you are completely understood. If you are completely understood what I said, it's fine, great. I'm very happy to be with you at this time. But if you don't have any clarity or still have some kind of thoughts in your mind about markets and all, you can call me personally. Anyway, for your convenience, people who are new, I will give my number here. So you can call me anytime and talk to me if you need. Sorry, I think I have to send it to everyone. Yeah. Yeah, this is my number. So you can call me anytime. I think a lot of my clients, in fact, our family, I say always, Wealth Tree family, they are there. So apart from them, if anyone who is our guests, yeah, you are welcome to contact us, and anytime we can give you the right suggestions, uh, basing on the yeah, get into the reality. That's what we do. What is happening right now and how you have to act basing on this situation. That's what we are going to do always, and we are going to support you with that. Thank you. So no questions. So I thought it's
Sir,
exactly.
thank you very much.
Yeah.
Each time whenever we are hearing your things, no, sir, we are getting really new things. Thanks for the updates and a lot of new efforts, sir. Thank you very much for this.
Thank you. And I will also share this presentation in the groups. What are all groups that we posted this webinar? I'm going to share in all the groups. I think you are there somewhere in other group. You can
Yes, sir.
actually go through that whenever you have time. So you will have more clarity.
Sure, sir.
And
Sure.
also
It helps
personal
us a lot.
meeting is, especially our portfolio clients, personal meeting is also required where we can actually look into the portfolios again and then we can take some calls on that. Okay.
Sure,
Yeah.
sir. Sure. Thank you, sir.
Yeah. Thank you.
Thank you, sir. It's a wonderful presentation.
Thank you. Thank you. Okay, guys, thank you. Thanks for your time and then listening to me patiently. And yeah, again, say only one thing, confident about your economy and your country. That's all. Okay. And then, yeah, this is our decade. No doubt about it. Only thing is, these are all small things will happen, corrections and all. Without correction, no markets will. Don't get panic and fearful about it. Yeah, be confident and don't get even greedy also. Yeah, you should be balanced. That's what is the message of this particular webinar. Thank you.